Callum Henderson. Callum is head of foreign exchange research at Standard Chartered. Callum, thanks a lot for joining us. First up, what do you make of all this?
Good morning. Well, certainly very uncertain times. You have Greece in the background, of course, with the European bank stress test. You have Bernanke's testimony, which roiled the markets first positively and then negatively. And then, of course, you have the rating agency news. So there are many reasons for sitting on the sidelines and waiting for a clear break one way or the other. And I think that's what many fund managers, many corporate treasurers are doing at the moment. If you look at the available data, it certainly seems to be the case that fund managers have high cash levels and are taking a relatively defensive stance at the moment, given the sheer degree of uncertainty out there in the market.
Yeah, I mean, you've got to be a brave man to get into the currency markets right now if you want to make money. I just want to also get your views as to, Bernanke's hints at another round of printing money, if you will. I mean, he didn't actually say that they were going to do that. All he said was he's leaving all the options open. What else has he meant to say here? And why did we actually interpret it as, oh, yes, the door's open for QE still?
Well, we do think it was a very important message, given that the U.S. economic outlook at the moment, or economic performance, is relatively mixed, and there are some signs that it's actually turning up. For him now to say that is very important from our perspective. We think it puts a backstop under risk appetite if indeed markets fall or indeed deflation expectations pick up in the US. So that's an important message. And from a risk or reward perspective, if you're sitting on 5 to 10% cash and you hear that there will be QE3, if there's a downturn, that limits your downside. It changes the risk-reward dynamic fundamentally. So that's a positive risk appetite, and from our perspective, that's exactly his intention. His intention is not to do a QE3. His intention is for the markets to do his job for him.
Right, so make everybody think that there could be this anyway. Let's just go back to S&P and Moody's as well, coming out and saying that they're on negative watch as far as US debt, the US debt situation goes. Is this, I mean, we keep on talking about this. Everybody seems to think that this is brinkmanship here, that something will be done. The question is, will it be a long-term or a short-term fix?
Well, that's exactly right. The overwhelming consensus in New York and indeed around the financial markets is that a deal will be done. But it does seem that the people in Washington are trying to snatch defeat from the jaws of victory. So clearly warnings have been given by rating agencies, and frankly rightly so, given what is happening. We do think a deal will be done, but rating agencies have given a very, very clear warning of what will happen if a deal is not achieved. And certainly the market is nervous on the back of that, and that's why the dollar remains very weak.
Yeah, and the money continues to flow into Asia. We see, Asian currencies getting stronger. Does that continue as we also get this? I'm not going to call it the tightening monetary policy cycle. I'll say that it's the normalization of it.
That's exactly right. So it is a normalization. Policy rates were extraordinarily low in the wake of the global financial crisis, and they are being normalized to historically more average levels. The dynamic of global markets has changed, and the global economy has changed. If you look at the G3, they're certainly not safe havens to any degree, whereas Asia has much, much stronger fundamentals now, not just right now, but over the next few years. So you're seeing a structural shift, not just a cyclical change, but a structural shift in how flows move around the markets, and a lot of that is coming this way to Asia.
Right, let's also just take a look at your favourite currencies in Asia. I mean, we've seen the Thai baht lag to some extent with a new government in place. When we do get actually the Electoral Commission come back and confirm Yingluck Shinawatra, is that got a lot of room for upside?
Yeah, we like the Thai baht. The overweight recommendations that we have in Asia at the moment include the Thai baht. We think that political uncertainty has been reduced, not eliminated, but reduced, and that growth is still healthy, and they still have a reasonable external balance. We also like the Chinese yuan, where appreciation expectations remain very modest. Indonesia has been and remains one of our favourite currencies. Also Korea and Singapore. So Asia is still a very, very strong story. Outside of Asia ex-Japan, we also like the Kiwi, which is under-owned relative to the Australian dollar.
Callum, great to see you. Have a great weekend. Callum Henderson joining us from Singapore.
Thank you, you too.